As nuclear power faces greater scrutiny in Japan and other nuclear-reliant countries such as Germany and the United States, equal focus has been brought to the central role that natural gas plays in the Japanese grid and worldwide. The lost reactors at the Fukushima Daiichi facility represented over 4 gigawatts of capacity for the region. Other reactors at the Fukushima Daini facility represented yet another 4 gigawatts of capacity and will be likely inoperable for over a year. This means the regional utility, Tokyo Electric Power Company, or TEPCO, and other utilities in northeast Japan must now turn to alternative baseload power sources. Natural gas has been identified as the key power source for Japan during its recovery for a number of reasons. Coal power plants are already utilized heavily and are running at high capacity, making additional ramp-ups difficult. Similarly, hydroelectric power output cannot respond with its limited stored reserves. While oil-fired generation will rise, its capacity in Japan is limited. High oil prices due to Middle Eastern unrest will additionally temper Japanese power substitution with oil-fired generation. Japan is the world's greatest consumer of liquefied natural gas, or LNG. The country's infrastructure for the unloading, gasification, pipeline transport, and storage of LNG is largely intact following the disasters. TEPCO will depend on LNG-supplied gas-fired generation as a long-term energy supply solution for northeast Japan. LNG imports are projected to rise by 500 to 650 million cubic feet per day by June 2011, while imports of oil and petroleum products to make up lost generation will reach 50,000 to 70,000 barrels per day. The carry-through effects expected from greater LNG demand in Japan are already being realized. Higher immediate pricing for LNG cargoes is expected to persist through the Japanese power crisis and current period of political instability in the Middle East. Spare liquefaction capacities will dwindle as the LNG market tightens, making investments in additional LNG export terminals more attractive and likely expediting development plans needed to quickly access available Pacific Basin markets for LNG. LNG cargoes destined for the Atlantic Basin are being diverted to Japan. This will ultimately impact the supply mix of natural gas for Europe, and additional imports from Russia are to be expected. Higher prices for LNG may also impact long-term contracts for natural gas in Europe. The events in Japan have had little influence in the United States, as LNG imports have fallen off in recent years due to the greater sufficiency in domestic production. Greater demand for immediate cargoes in the Pacific Basin and then the Atlantic Basin represent yet another consideration in the transforming energy economies of East Asia and Europe. Among Asian countries along the Pacific Basin, rising natural gas consumption in conjunction with the tightening LNG market will encourage the exploitation of domestic gas reserves, including alternative reserves such as shale gas. In light of the questionable status of nuclear power in Germany and other European countries, a greater role for LNG must be considered and weighed against its higher prices, as well as the alternative low-emission and renewable power resources available.